We increased our credit score over 30 points in less than 60 days. And in this video, I'm going to share with you exactly how we did that. But first, my name is Samantha Hammonds. I am a realtor here in the Killeen, Temple, Belton area, the Fort Hood area. So if you're looking to buy or sell in the area, I would love to help you out. And if you're actually looking to buy or sell anywhere in the United States, reach out to me. I can connect you with a vetted agent that is going to take great care of you. So let's go ahead and just jump right into it because we've got a lot to cover. So today I'm going to share with you exactly what my husband and I did to increase our credit score back in 2022 when we bought our very first home. Now, I have to give a legal disclaimer. I am not a financial advisor. I am not a lawyer. I'm not an accountant, CPA, nothing of the sort. Take what I say with a grain of salt. This is not financial advice. This is not legal advice. This is just what me and my husband did with the help of our lender. And I cannot guarantee this is going to work for every person. This is just what we did based on the recommendations of our lender when we purchased our first home. So I just wanted to get that out of the way. Okay, so let's go. First and foremost, if you know me, you already know what I'm about to say, and that's all glory to God. Yes, I'm serious. I give all the glory to God because we would not have been able to even think of buying our first home if it wasn't for him. Literally, he planned everything out so perfectly. It's all by his grace and his mercy that we were able to do this. So all glory to Jesus Christ. Now, the first thing we did was we downloaded the My FICO app. This is the only app that I can recommend to you that will give you your actual mortgage scores, what the lender sees, your credit report that they see, and they don't actually have to pull your credit report to run your credit and hurt your score. It's going to show you exactly what the lender sees. My lender recommended this to me, and when I learned about it, I have been telling everybody, just throw out Credit Karma. Throw it in the trash, delete your account, because My FICO is the only thing I know that's actually accurate. Just get you a My FICO subscription. My husband and I, we did the monthly subscription when we were in the process of buying, and it was definitely worth the $60 per person for that 3 to 6 month time frame while we were in the process of purchasing. Find out exactly what your score is, find out what's on your credit report, and once you have that, knowledge is power, you can take that and you can talk with your realtor, you can talk with your lender, and talk about where you need it to be and what you need to do to get there. Now, your lender is going to use your lowest middle score between you and your co-borrower. So you have your TransUnion, your Equifax, and your Experian scores. That's your 542 scores. And between those three scores and whoever's on the loan, they're going to look at the middle number for each person, and they're going to actually use the lowest of the two of you to qualify you. So for example, you have a 600, 620, and 650, but your co-signer has 700, 720, 750. They're going to look at the 720 and the 620, and they're going to use the 620 to qualify you. Really kind of sucks because you think they should use the higher score, but they're not. They're going to use the lowest middle score as the qualifying score. Now, we started back in January 18th, 2022, and our credit score was less than 600. I think it was 580 or 590. And by the middle of February, we had it up to 621, which is exactly where we needed to be. So it was about a 30 to 35 day period. And here's how we did it. So we pulled our entire report with the My FICO app, and I had my lender actually look at it with me and determine what items are going to affect us when the underwriter is looking at our file. Because it's not actually just all about this credit score. So we were looking at what are the red flags. So your collections accounts, non-collection accounts, charge-offs, credit utilizations, all these things, she was able to tell me outside of the score itself what was going to be a red flag. Because like I said, your score isn't the only factor. She was able to tell me what is going to help if we paid it off and what would not benefit us to pay off so we weren't wasting any money. So that's actually really important. And after having her go over my report with me and my husband's report and tell me what it all meant, we broke down what he and I needed to do to try to pay off debt-wise and what we actually needed to try and ask for deletion on. And that's the first key piece. You can pay off a collections account all day long, and that does help when the underwriter pulls your report to see that zero balance. But it's not going to increase your credit score unless you pay for deletion. And not every debt collector is going to allow you to do that. And on top of that, collections accounts do get counted in a small percentage of your monthly debt to income ratio. So it really is important to see what needs to go, what needs to be deleted alongside your lender, or just paid off in general, even if you don't delete it. Medical collections are the only thing excluded from being able to affect your mortgage. So you shouldn't have to worry about those, but talk to your lender, of course. And when you're going to settle or pay off these debts, it does help to ask them if you can pay for deletion completely off your report, because like I said, if you don't pay for deletion, it's not going to increase the score, which again, The score is not the only factor. So it still does help the underwriter to see that zero balance. So it's not a red flag and it's not affecting your debt to income ratio in the approval process. But deletion is always better 9 times out of 10. So personally, we paid off one small collections account that was like $70. We did not pay that one off for deletion. And then we had another bigger account that we did pay for deletion. Now, we did have to pay that one in full to remove it from our report completely. They wouldn't let us settle it for less. But if they will, still ask them if you can settle it for less and still pay for deletion, because if they let you, do it. And also remember, always try to get what you're agreeing to in writing before you actually pay any money, because y'all know sometimes these companies can be a little sketchy, okay? So always get it in writing, even if it's just an email, what the agreement is, what you're agreeing to pay, and for what reason. And then also, before you pay off any collections, call all of them and write down each company, what they're willing to settle for, if they're gonna allow you to pay for deletion, how much it's gonna cost. And then for me, what I would do is I would start with the lowest amount first that allows for deletion and work my way up to the highest. But I would definitely prioritize those that allow me to pay for deletion. Of course, your lender says otherwise, because sometimes those higher balances can affect your debt to income ratio and you need to get rid of those. So just make sure you talk with your lender about that. Now, next, we went really hard on our credit cards. And what I mean by this is we left every single account open, even the ones that were high balance, we left them open. We paid them all down to a 3 to 7% total balance, and we never let it roll over to the next month after that point. So we paid it down, we let it report that small balance to the credit bureaus, and then we paid it off before the due date. So this actually required that we looked at each statement cycle of each different card to know when to pay it off, so that we could pay it off before it was due, but after it had already reported the small balance to the credit bureaus, which was about 2 weeks after we got the statement usually, but before the due date. You're always paying it in full before the due date, but you're allowing it to report that small balance, and that shows responsible credit usage. You actually don't want a zero balance to be reported. You want it to show that you can use credit and you can use it responsibly, but definitely not more than a 7% reported. Now, we had like 2 to 3 credit cards, but I actually don't think it matters how many cards you have. What matters most is the total credit allowance. If you have 3 cards at $500 each for $1,500 total credit, or just one card for $3,000, that $3,000 overall credit used at a 3 to 7% usage is gonna look better. So to reiterate, what matters the most is the utilization of your total credit limit across all the cards, whether it's 1 card or 3 cards, it doesn't matter. Now, if you don't have a credit card or you can't get one, I do recommend that you try to get a secured card with a small balance or a large balance, whatever you can get, so that you can begin to do this every single month. So remember, 3 to 7% usage of your credit limit every single month, pay it off about 2 weeks after you get your statement, but before the due date so that you never have interest. And I really think that was the biggest piece to increase our credit score as fast as it did. When we did that, literally within a couple weeks, our score had gone up so much, and that was just so fascinating to watch. And now I actually think the reason this worked so fast for us was because of the timing that we started it all. We started right around the end of our statement period, so it kind of just started, again, at the perfect time. We paid that balance down to 3 to 7%. It reported at the end of July, early February, and then bam, our scores went up, and then we paid it. And then we did it again. Plus, having a collection fully deleted, that actually helped quite a bit with our total score and utilization and all the things. Plus, having that collections account that was actually like a pretty big balance fully deleted off, that actually helped quite a bit as well. So realistically though, I would expect that this takes 60 to 90 days of reporting, but let me tell you, that time will fly by. You will have a lot to do to getting ready to buy your home. I love seeing our scores go up little by little every time a card got reported to the bureaus. Like one card would report and it'd go up, then another card would report and it'd go up. And it was actually really cool. Now, I only recommend using the credit card method if you can be responsible, because if you are going to have any temptation to overspend, don't do it. Just take the longer route, because it's not going to help you if you carry a balance or a balance of more than 7% of your usage is reported per billing cycle. And that brings us to the next thing. On the cards that you already have open, request a credit increase. The higher your total limit, and with that low 3 to 7% usage, the better that looks on your report, like I said earlier. Again, never cancel a card. Even if you never plan to use it, when you cancel the card, it's going to dramatically decrease your score and mess with your overall utilization. So you don't want that. And then another thing, if you are working with a lender, please, 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 please make sure you are talking with your lender before you pay off a debt, like car loans, student loans, whatever it may be, because you could actually hurt your score by fully paying off a debt. Just like with credit cards, if you let it report a zero balance, you're usually going to actually hurt your score and not help it. So make sure you ask your lender before you pay off a debt. Usually it's a good thing, but just make sure you ask the lender. Most lenders actually have a credit simulator that they can run to determine how much of the active debts you need to pay off to benefit your situation, what you shouldn't pay off, what's not going to help, all that good stuff. But to recap, get the MyFICO app and look at your mortgage scores. This is crucial. Look at your report and determine what collections or charge-offs you need to pay and if you can pay them for deletion. Have a credit card or two and pay the balance down to 3 to 7% utilization for the current statement period. After you get your statement, pay that balance to zero and then start again for the next month. Get some gas, buy a candy bar, just something small. Let it report to the credit companies again. Pay it off again 2 weeks after the statement is sent, and repeat. Rinse, repeat, rinse, repeat. And always talk to your lender. Don't spend all your money. You may need that money in reserve to buy the house, so make sure you're talking with the lender. I said that a billion times, but it's so crucial. You actually may realize that there are some debts that are more important to pay off right now than others, like some larger, some smaller. You may think paying off a bigger debt is the most important thing, but maybe it's actually the smaller debt that's going to help the most. Just let your lender work with you. And if your lender's not willing to review your report with you and sit down and go through it all line by line, it's time for a new lender. Just going to say that. Now, of course, always pay all your bills on time. That's a huge factor in your credit score. And another thing, if you can't get a credit card on your own, see if you know anyone who is very, 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 very responsible with their credit cards and keeps their limits low, who pays their balance in full every month, who doesn't max out their credit cards, and ask them to be an authorized user on their account. Not that you get a card, not that you're going to spend anything, but just adding you as a user could also help your score. So anyway, this was a long video. Thank you for sticking through it. I hope it helped you. And if you want any clarification or you have any further questions, please feel free to reach out to me. All my information will be down below. For 10 years, my husband and I, like the first 10 years of our marriage, we thought we would never be able to buy a house. Our scores were so bad, but guys, we did it. We actually had a running joke within our household that for our 10-year anniversary, we would buy our first house. And our anniversary was March 10th, 2022 for our 10-year. On March 28th, 2022, we closed on our first house. So remember that with Christ, all things are possible. You can do this. Do not give up on yourself no matter what your situation looks like. Let's do this, and I look forward to talking to you soon.